Good day to all. Today we are going to discuss about an amazing IT portfolio. IT companies has been heavily corrected in the last few weeks. This is mainly due to the major corrections in the Nasdaq exchange in US and FII selling in India. Nasdaq exchange was corrected due to the expectation of Fed interest hike and the major results of the companies like Netflix, Amazon, and Accenture was not up to the expectation. However, Apple posted a very good results. This is coupled with the FII selling in India. FII is in fact sold above 5,000 crores of shares on every single day in the last week. So, as a retail investor, what should be our strategy in this scenario? I strongly believe that we should take the opportunity and should build a balanced portfolio in the IT segment. IT segment is a huge segment which has many subsects within it. Not all IT companies work in the same profile. Every company has a different profile. So one should either build a very good scripts, I mean very good balanced portfolio now, or we should reorganize our portfolio in this scenario. Kindly note that this video is just educational, just for an educational purpose, not a recommendation for buying or selling. So let us quickly review one balanced portfolio from IT segments, which covers large cap, mid and small cap, and in fact micro and penny cap as well. This portfolio covers all major subsects within IT segments. So before going into the details of these stocks, let us review quickly on these stocks. First one, large cap. We have Infosys, TCS, WIPRO, HCLs. One should buy two stocks from these large cap stocks. It is not practically feasible for a small retail investor to invest in all the stocks, and investing in all the stocks will not give any return as well. There is a saying, if you invest in too many stocks, it's as good as putting the money in the FD in bank. Or if you invest too less stocks, it that is a big exposure of the risk. So a balanced portfolio is required. So from the large cap segment, we can take two stocks, Infi, TCS, Wipro, and HCL. Let's review that in detail in the coming part. Then in the mid and small cap segment. In the mid cap and small cap, one should have Tech Mahindra. There is no choice for that. Then next one, KPIT and Tata Elxsi. We can we can take either of KPIT or Tata Elxsi. I personally prefer KPIT due to some reasons, which we will explain. Next one, Tanla and Root Mobile. I personally prefer again Tanla here. Then CAMS Persistent Affle. One can take one of these, minimum one of these. These are the major stocks in the mid and small cap. Next is microbar penny cap. BCG. One should have it in the portfolio now. Personally, I am holding these stocks bought at the rate of 10. Now it is trading at 170. Then we have exchanging CMF, Infobean Technologies, Nelco. All these stocks can become a multi-bagger stocks in the coming months. So one should have investment from this stock as well. Now let us review the large cap stocks. In the large cap segment, we discussed about HCL, Infosys, Wipro, and TCS. It is better to have two of these four stocks. All these four stocks are large cap, consistently performing stocks, and is giving good results. Personally, I prefer HCL and Infosys from here, mainly due to the valuation. HCL PE is 26.6, while the industry's PE is 33.9. So it has a huge way to go up. So HCL is foreseeing at trading at 2000 plus in the next 1 to 2 years. Having said that, we also need to understand a few facts about HCL. One thing, you can see that there is no cons in screener for HCL. The company's operating profit is stagnant. If you see from the March 2000, sorry, June 2019 to December 2021 quarter, the operating profit is just moved from 4,000 to 5,000 plus. It's like less than 10% CAGR. What does it mean? It means that in the current scenario, the company may grow in can grow in a very slow pace only. We should not expect multi-turn growth in these kinds of stocks. Next is Infosys. Infosys is an amazing stock. It's compared to CL, it is slightly valued, and the PEG is 4.45, but it has a huge potential for growth. Let's look at the sales of Infosys as well. Again, Infosys CAGR is 5,000 to 8,000. So it is 10 to 20% CAGR. It is obvious that Infosys will grow up from this, go up um, from this current level, but one should not expect again multi-turn growth here. Next is Wipro. Wipro is at a very good valuation now. It's 552. So this could double in the next 1 year. And you may please also note the Wipro's sales. Wipro sales is is also stagnant for the last 4 5 quarters. However, company's profitability is 21 percentage of operating profit, and the PE ratio, we have seen the PE ratio is 25 while the industry PE is 33.9. One flip point with the Wipro is that its PEG ratio is already 5.68. Having said that, this has again potential to go up further, but will not give immediate multi-turn return. Next is Tata Consultancy Service is also continuously posting good results. Here you can see the quarter profitability, operating profit. This is also growing at 10 to 20 percentage CAGR only. So this company, TCS, is an amazing company. It's the first company in the Indian stock market. So one can select two out of these four stocks: Infi, TCS, Wipro, HCL. So it's your choice and your call. But it is better to have minimum two out of these four stocks. Always one can even take four stocks. I personally hold three stocks from these four stocks. Next, let us get into mid and small cap. So Tech Mahindra is the first stock and one should have it. This has got huge potential for growth. So just one point here, the PEG of Tech Mahindra is 3.28 only, while all other large cap stocks has the PEG above 5, and stock P is 27 versus industry P of 33.9. So it has all the potential to give multi-turn returns, and one should have these stocks in the portfolio. One should have either of KPIT or Tata LXI in the profile. Both of these companies work in the automotive segment, which supply software support for vehicle. KPIT's major customers are BMW, Audi, and also Porsche and all. Major customer of Tata Alexa is Tata Motors. I personally prefer KPIT here because I'm feeling like Tata Alexa is already reached at a higher level. KPIT has more ways to go up. Then Tanla and Road Mobile. Both of them operate in the communicative IT segment. For an example, if you're working or if you are using any app, bank app or our share app or any kind of app in the mobile, we will have this OTP who is working underneath of this Tanla and Road Mobile. I personally prefer Tanla here because of so many reasons, which I'm not going to the detail of it now. Next is CAMS, Persistent, and Affle. CAMS has no competitor. Affle is in the ad tech company, so it has a huge potential to grow. It is good to have all these three stocks, but at least one should have one of these three. Next is from the micro or penny cap stock. One should definitely have BCG in their portfolio. Let's quickly review the BCG financial indicators. I'm not going to the any of the key indicators of BCG, but just giving one direction on where BCG is traveling to. Remember, BCG was trading at 7 rupees in January 2021 and now it is 170 rupees. I'm personally holding the stocks at 10 rupees. See, in June 2021, the sales were 654 crore, which is now 2021 crore in December 2021. That means the sales increased by 100% in the last two quarters. So you can imagine where BCG is going. This will give multi-turn returns, but the fact is that you will not get BCG at least for the next 1 week. It is continuously in the UC. You may have to put overnight order for order to get the stock, but keep the stock in your portfolio. This will definitely give multi-turn return, and this is a multi-bagger stock. Other small micro and penny cap stocks are exchanging CMS, Infobean Technologies, Nelco. I'm not going to the detail of these stocks, but all these stocks can become a multi-bagger in the coming months. Especially exchanging is a foreign company which is at a very low valuation. CMS is now listed very recently. It is operating in the ATM functions. Infobean Technologies and Nelco are both all these four companies are amazing companies, has a potential to give multi-bagger returns. I don't have investment in all these three, all these four. I have investment in exchanging, CMS, and Infobean Technologies. So, in nutshell, this is one balanced portfolio. It's a kind of a balanced portfolio. One should have it. Definitely, you can add other stocks in different segments here. There are many other companies which works in different segments here. But remember to make sure that the stocks you are selecting from the IT segment covers the different subsects within the IT segments. Thank you all for watching the video. Thank you very much.